All right, I think we are live now. So once again, welcome everyone who is here with us in Zoom and everyone who is watching us on social media. We are here today on our regular format of VC pitching sessions hosted by InnMInd. And today we're focusing on a vertical agnostic Web3 deal flow of amazing startups that they're going to be pitching today to amazing network of our VCs within InnMInd. So as always, I just wanted to start with a brief introduction of our VC guests from today's session. So I wanted to pass the mic first to Josu from Stratified Capital, just for a short introduction about the investment focus. Joe, please.
Sure. Thanks. Thanks, guys. Good to have me here. And I think we are Stratified Capital. Usually we provide some advisory services. And two things that we really care about is one is technology barrier, and another will be the mass adoption potentials. And our portfolio company covered infrastructure, like DeFi infrastructure as well, 0.0, ZK, Layer 2, GameFi, Metaverse. So yeah, diversification is one of our methodology here. And I think we got resources for you guys to grow, and our vision is to build with the builders. Thank you.
Thank you so much, Joy. Yeah, it's always a pleasure to have you. Thank you so much. Amazing. So then I wanted to pass the mic to 369 Capital. I think Fyodor is with us today.
Yes. Thank you very much. So we're 369 Capital, a Switzerland-based investment company that is operating since early last year. Nevertheless, our team has been around since 2016, 2017. We are hands-on participants in the market. We have a focus on early stage investments. We are narrative and protocol. So we don't have a focus on that or on any particular. If we need to pick a focus, currently we are more of looking into DeFi and infrastructure.
Perfect.
Happy to be here.
Thank you, Fyodor. Yeah, great to have you with us as well. Amazing. Moving on, wanted to pass the mic to Larry from Blockbase. Larry, are you here with us? Okay, maybe some connection issues. All right. Meanwhile, wanted to give a word to Jack and Catherine from Gatelabs, also for a brief introduction.
Okay, thanks everyone. And Jack from Gatelabs, and mainly in charge of token listing and investment. And we about our investment strategy, we tend to invest in early stage tokenized projects, and infrastructure and DeFi projects are preferred but not limited. Yeah, so, and again, we are happy to see you guys here, and hope everyone has a lovely day.
Thank you so much, Jack. Yeah, great to have you with us, and also Gatelabs in general. Thank you so much. Wanted to give a word to Marcus from TX Ventures, also for a brief introduction.
Yes, so hello, nice to meet you everyone. Marcus from TX Ventures. TX Ventures, early stage fund out of Switzerland as well. So the second one already out of Switzerland. Early stage means for us usually ticket size somewhere between 500K up to 5 million. So usually not the first, but the second institutional investor joining around. So seed to early Series A stage, interested in, on the one hand side, B2C, everything which increases mass market adoption, so increases user experience, ease of use, onboarding of new users to DeFi. On the second side, on the B2B side of things, everything solutions which increase transparency, structure, compliance, to onboard really institutional investors to DeFi in general. So these are kind of the two main sectors we are interested in.
Thank you so much, Marcus. Yeah, fingers crossed you'll find your next portfolio startups here. Amazing. Just the last check. Do we have anyone from Blockbase in the room? Okay, maybe Larry is joining us a bit late or watching us on YouTube right now. All right, amazing. There are also other investors and participants watching us live. So we will be monitoring the YouTube chat for the additional questions. So let's get started with the most exciting part of the session, the startup pitches. And I wanted to give the mic to Ondefy project by Gotthard Villa from Switzerland. So please, the floor is yours.
Yeah, thanks for the invite. Great to be here. Let me just share my screen. Are we good? You
Yes,
see my screen?
we're all good to go. Yeah.
All right. Yeah, so my name is Gauthier. Before I started this journey, I used to have an agency here in Switzerland, which helps startups raise over $10 million. I was really active in the Swiss crypto communities and pretty early in the DeFi days. And I saw this big issue, which is the fact of accessing on-chain tokens. Today, if you want to explain to someone how to buy this particular token from this chain, it's very complex. It demands a lot of explanation and follow up with people to make them understand and explain them how to access these assets. So this is why I built Ondefy, because I saw this problem in the industry. And actually, when you think about it, it's very hard. Today, you have to explain people how to set up a wallet, how to interact with DEXs, use different types of tools, go on CoinGecko to find a particular token. And when you think about it, it's the first thing that people do when they get in this space. When they get into DeFi, they don't get into DeFi because they want to get in and just use like decentralized tools. It's because they actually want to access a token they cannot find on the centralized exchange. It's a typical user journey that we've analyzed and understood. So our solution is pretty simple. We try to make it as simple as possible for anyone to access their first on-chain token and then have a place where they can use different types of DeFi tools in a very simple and aggregated way. So how do we make this happen? We've built an infrastructure on top of REN providers where we enable anyone to access any on-chain token with just an email and a credit card in a very simple way. So we manage everything for the user, whether it's the gas fees, whether it's finding the right liquidity, and finding the right token. So this widget is integratable into any dApp, meaning that if tomorrow you launch your own token, you can make that token accessible with fiat or crypto, and anyone can access that specific token. So once the user has bought his first asset, he can come to our super app where he can access other tokens. He can get the best price on any token he wants. How do we do that? We aggregate multiple DEX aggregators so that the user can choose and have the best routes. We also leverage account abstraction so we can manage gas fees, abstract networks, or proofs and signs. And the user can access a whole other ecosystem, like he can generate yield, and in the future we'll add more services such as leverage trading, options, borrowing, having everything in one single user-friendly place. So why now? Why is it important? We can clearly see that decentralized exchanges are eating up the volume of centralized exchanges, but there's still a hurdle. There's only 5 million people that are actually using DeFi today, and it's going to keep growing. Even CZ yesterday in Bankless was talking about the future of crypto, and he was saying that the future is going to be on chain, especially with layer 2 solutions scaling up and lower transaction cost. People are going to be on chain. So how are we different from our competitors eventually? We are really focused on the Web2 user experience. We also aggregate protocols and propose to the user itself to interact directly with these protocols. So we don't have a router that routes the transactions. And we are really focused on account abstraction to simplify the whole user journey and experience. So what have we achieved so far? We've done around 2 million in volumes, have around 10,000 users. who's using the platform. And we've also built a community of 26,000 people, with Twitter and Discord put together. We've received grants from Polygon. We've launched an NFT collection, which is worth more than 100K. And we just had Mark Ziller, one of our angel investors, said that's Ondefy is a good example of a super app. So we are headquartered in Switzerland. Part of the team has won multiple ETH Global Hackathons. Sacha has worked at Google. Antoine is the co-founder of DeFi France. And we also have Julien Bouteloup as an advisor, which is core developer at Curve Finance and founder of StakeDAO and Stake Capital. So we have already onboarded some angel investors and funds that are helping us to make this possible. So how are we going to generate revenue? We have a pretty specific strategy for this. We have the MetaDex aggregator, which is not generating any specific, I would say, important fees. We have the widget that just enables people to onboard DeFi. That's a way for us to attract users to our super app and then propose more services where we take more commissions. All these revenues have actually come back to the DAO. So how are we driving adoption today? We've launched some campaigns on Galaxy. We've just launched on ZK Sync as well. In the future, we're going to have token incentives with points. So depending on the volume you will do, you will receive a certain amount of points, which will be claimable at TGE. There's also different types of mechanism to retain users, such as the token itself, so that people can participate in the governance and also receive rewards in form of ESOD tokens. So we are planning to launch different types of incentives program, also provide gas cistern transactions, and preparing for a token launch by the end of the year. And eventually, the end goal, the end vision is to create this one-stop shop where people can access DeFi in a very seamless way and aggregate protocols to provide the best pricing. And eventually our end goal is to have a fully decentralized application and governance. So thank you for your attention. Don't hesitate if you have any feedbacks or questions.
Thank you so much, Gauthier. Yeah, that was a great pitch, and yeah, appreciate being on time. Any questions, please?
Yeah, go on. So yeah, appreciate to bring out this projects. I think instead of the UI UX, so what do you think will be the differentiations in your own words? Sorry to sounds a bit critical, but yeah, I really like to know, like in your own words, what is differentiation?
You mean different from what precisely?
Like different DeFi aggregator, to be more specific.
Oh yeah, great question. So how are we different from this? It's we created an interface which is really familiar, as familiar as almost a centralized exchange. So our app is fully responsive. So it's just like as if you were using crypto.com or Swissborg, but you're just fully on chain. You have the best prices. So we don't have a router where we route transactions. We actually show you that you're interacting with different types of DEX aggregators. So that's also a way to bring trust to the user so that he can inherit from the security of these DEX aggregators. Also, we've built on top of Magic Link. So we are, if you use, for example, if you try the app with your email address, you will see that we are able to abstract networks, gas fees, approves and signs, and all these things also are very important, especially as we are more focused on onboarding Web2 folks compared to our competitors who are mostly have products which are more for experienced users.
Mm-hmm. So I think BD will be an important job for you guys. And yeah, I think we could talk more later on, for our following meetings on this part. Thanks.
Great.
Thank you, John. Marcus, I see you unmuted. Do you have a question?
Yes, so already know Gauthier. So we met actually yesterday in person, but happy to ask another question here as well. So maybe can you say a few words, because already Joe asked you this as well, and I already get that you're completely focusing on onboarding like the Web2 user, but maybe you can say a few words how this concretely will work and how your go-to-market strategy is set up to really win like Web2 users to Web3.
Yeah, so one way today is the widgets. We've have some integrations with some projects who are even just integrating the solution because they want something simple for people to access their token. So that's one organic way to to get those users on board. Also, we have many partnerships with KOLs who are just ready to talk about the product, and also we see a huge potential on I would say more traditional medias where we see influencers say, so have you ever thought about accessing this token and you're not able to, or I don't know if you can picture yourself, and having these types of influencers and people talk about this particular problem. And this is a way that we think that we can onboard a lot of users by really focusing on breaking that entry barrier into DeFi so that people can buy their first token. Then eventually there's all the features that's on the app, the token incentives. And also we're going to launch an NFT campaign with different types of quests. We're doing also, we're very close to Galaxy. So that's also a great way for us to leverage and attack the markets. So many ideas, but if you have any other suggestions or comments on it, happy to hear you out.
Great. I think this answers the question. And anyway, if you met offline, I think you had much more to discuss and we'll be discussing, so which is great. Any other questions or comments maybe? All right, I believe not for now, so the rest should come in private. So Gathir, yeah, thank you so much for the pitch, which was great. Yeah, appreciate you sharing the project.
My pleasure. Great meeting you all.
Thank you. Amazing. So we're moving on, and I wanted to pass the mic to the Fluidity startup by Shashmir, coming from Australia.
Hey everyone, I'm Shamir, and yep, we are located here in Australia. We've been working on Fluidity for the good part of the last year and a half, 2 years, and I think you guys will find what we're working on pretty interesting. It's definitely a bit novel, and I'll try my best to use the next 5 minutes to explain it as much as I can. But sometimes these explanations can even take hours, which is okay. But if anyone's interested, we can definitely go into that. So I'll share my screen. Cool. I think everyone can see it now, more or less.
Yes, all good.
Awesome. Cool, thank you. So we're working on something called Fluidity, and Fluidity essentially in a nutshell is a new DeFi primitive that allows us to distribute yield when people do transactions. So it's quite different than the existing DeFi primitives that exist because we are really thinking about a new way of generating and distributing yield. So essentially, we call this the utility problem. And the idea being that decentralized finance protocols and crypto in general has incentive models that revolve around the idea of, staking and speculation. And so the idea is that there's no incentive, or incentive models do not exist to promote utility or the adoption of crypto protocols or doing things. And because crypto has revolved around this idea of incentives rule everything, we thought that it actually makes a lot of sense to create systems that can provide incentive for actions. And the goal being that this can actually promote the utility and adoption of cryptocurrencies. So what does this look like in practice? Well, essentially, the idea is very simple, is that Fluidity allows us to create something called a fluid asset. And a fluid asset is a wrapped stable coin. For example, we'd convert USDC into fluid USDC. And it's basically worth the exact same thing as the underlying collateral, but it has a very magical property, is that when you use Fluid USDC, meaning it goes from one wallet to another or to a smart contract, that trigger mechanism of using it actually is a yield bearing event. So you actually generate yield on that trigger mechanism. So the idea being that every time you do a transaction, you earn yield. And the way we distribute this yield is in a non-deterministic manner. So what it looks like in practice is every time you do a transaction using a fluid asset, you can get anywhere from a couple of cents to potentially even thousands of dollars. And this kind of gamifies the entire experience. You might be wondering, okay, where is this yield coming from? And it actually comes from the underlying collateral. So to create one fluid USDC, we essentially take one USDC and we deposit that into a money market such as Aave. And that yield essentially gets redistributed to people that are now using fluid USDC. Another really cool behavior of fluid USDC is the fact that it actually pays yield not just to the sender, but also the receiver. And the idea being that this creates that feedback loop to promote adoption and utility. So let's say you're making a payment using Fluid USDC and you win $1,000 for making that payment, the counterparty gets $200. And this idea is that now the counterparty is incentivized to adopt fluid assets or cryptocurrencies as part of a transaction. So we talked about counterparties or payments as one of the use cases, but we eventually realized anywhere on chain where value is being transferred, you can now earn yield through this primitive. So obviously sending and receiving crypto, but even on the DEX. So let's say you're buying ETH, you can buy ETH using Fluid USDC. Now that the very transaction of buying ETH using Fluid USDC is now a yield bearing event. So you could just earn money for making that transaction. Things like purchasing or selling NFTs for fluid assets, performing swaps, right? Where the counterparty is a liquidity pool. Even in use cases like that, if the counterparty being the liquidity pool earns the yield and LPs get more revenue. So essentially there's a lot of use cases on chain where this can be adopted, and it creates a new interesting paradigm because people can now earn yield in a novel mechanism. And there's no extra cost of doing so. So you're getting rewarded for doing things that you already do. Some other interesting use cases that are high volume include betting markets, where if you place a bet using Fluid USDC, you could just win from just placing that bet. So it's like a cool mechanism for promoting adoption, and we're working on use cases and adoptions on them on that front. Just very quickly, if you might be wondering, how do we prevent Sybil attacks? We came up with basically an algorithm that we call the optimistic solution. Essentially, as part of that, our protocol looks at the gas fees that a user spends and like the transaction fees that might come from like LP fees, and accounts for that as part of a formula where it outputs expected values. So essentially, if you spam or Sybil our protocol, you will lose money. But if you're a genuine user that was gonna pay gas fees or protocol fees anyways, you will essentially have a positive EV compared to not using a fluid asset. And if you want, I can definitely go deeper into this. So where are we right now? So we've launched on Ethereum and Arbitrum, but our focus is now on Arbitrum. We've been live on Arbitrum for the past 2 months. And since then, we've almost accrued over 17 million in volume from 23,000 transactions. We do have a Dune dashboard as well, which I can share, but this is from our dashboard on our website. And yeah, we mainly support Fluid USDC or just USDC as a wrap token, and we're working on creating Fluid USDC. It's like a combination of all the stables. And yeah, so people are actually using fluid assets. Most of our volume is coming from AMMs and routers, which is interesting because LPs on those routers are earning a lot more money than they would from vanilla USDC, providing liquidity on those pairs just because of the higher throughput and the way the fluid assets behave. And our plan is in the next few months to launch on ZK Sync, and then there's a few other zero knowledge chains we're also talking to. one thing I didn't get to mention is that our algorithm is also being used and can be used to distribute tokens. So protocols that are looking to bootstrap themselves, they can use our algorithm to distribute tokens. And so we created a new category of token distribution. We call it utility mining. And the idea is you can distribute tokens to your users instead of just liquidity providers. And so we're already in talks with protocols signing up for that and distributing tokens when people use their protocol. And we essentially earn revenue from that. And we have we have the rights over the algorithm. So we will have like market share on this distribution mechanism for the time being.
Shahmir, yeah, sorry to interrupt. Yeah, you're done. So
Yeah, that's the full 5 minutes, maybe a bit more. Yeah.
Thank you so much. Yeah. Any questions, please? I think that meanwhile, I mean, I'll allow just maybe a couple of seconds to think on the questions, but I've seen that Larry joined us at the beginning of your pitch from Blockbase. So hi, Larry, if you can just give us maybe a couple of words about your current investment focus and just a general introduction to the fund, that would be great. Larry, are you with us?
Hello. Can you hear me?
Hi, yes, we can
Hi.
hear you now. So if you can just give us a brief introduction to Blockbase, that would be amazing.
Hi everyone. I'm from Blockbase Ventures. We are venture based from Canada, but right now we are invested more in APAC, in Vietnam, Thailand, Singapore, Malaysia as well, in this area. And right now we are focusing on infrastructures, NFT, and a little bit on GameFi, but we only do GameFi infrastructures.
Okay, perfect, Larry. Yeah, thanks a lot for sharing. Great to have you with us.
And a little bit, our ticket size is from 100,000 to 2 million. If you would like to know more about it, so if you have anything that fit our investment theories, then you can ping me anytime. Thank you.
For sure. Thank you, Larry. Hope you like the projects from today's session as well. Coming back to Fluidity, any questions to Shahmir, please?
Maybe a quick question from my end. So maybe like if we so thank you for the presentation. If we have a look, if I need to compare it to Web2 business cases, could we see it what you're building as kind of a cashback system for Web3 transactions? This is the first question, and the second one: what kind of transaction qualifies actually then for rewards? Is it like every transaction with whatever done, or is it like that you need to onboard specific protocols which are eligible for your rewards for your yield event?
Yeah, no, that's a very good question. I think I can answer both of them within one answer. So the way I would differentiate this from cashback is deterministic, meaning you get a certain amount back every time you use it. And then also it requires onboarding and opt-in, right? You have to go to partners and say, hey, let's do some sort of deal, or, you can go back to, or like with Visa or MasterCard. But with Fluidity, it's probabilistic, meaning you'll get anywhere from a couple of cents to a very large amount. We've seen our research shows that people prefer that more, and building that also makes it less gameable, our system. But also the cool thing about fluid assets is that they're composable. So nobody has to build any integrations in, they just work because all the logic is in the smart contract and the off-chain. So as long as someone just supports the regular ERC20 token or whatever regular standard on that chain, it will work. But we do have special promos with some partners where we increase their expected value. So for example, for some of the partner protocols that we're working with, if you use them over their competitors for trading fluid assets, you have a higher chance of winning. And that's really been a great way for us to build partnerships and promote order flow. Eventually, we will have protocols paying for or bidding for order flow, where essentially users get a certain amount of revenue back as part of like, using them over someone else. And they'll all be in the smart contract layer. And the way it works as well is that you get an airdrop from the protocol. We batch the transaction multiple times a day. So you don't even have to manually claim it. So it's a very seamless experience on the user point of view. So it's like just using DAI or USDC.
Perfect. Thank you. Understood.
Thank you, Marcus. Any other questions? Joe, further, Jack, is it all good on your end?
So far, so good. Yes, thank you.
Yeah, me as well.
Okay, perfect. Then yeah, Shahmir, the rest I'm sure will come in private. So yeah, thank you so much for sharing the project with us. Really appreciate the pitch. Thank you. All right, so we are moving on, and I wanted to pass the mic to the project called Dolphinze by TT Lingron, coming from US.
Hi, everyone. I think you can see my screen, right?
Not now, no. Yes, right now we can see it.
Awesome. Thank you. All right. Hi, everyone. I'm Titi from Canada, and with my co-founder, who's from Srini, who's from India, we are building Dolphinze. It's a global digital token-based payroll infrastructure for individuals and enterprises alike. Participants in the Web3 industry prefer compensation structures that reflect the industry's trustless and transparent transaction ethos. Studies show that 51% of Gen Zs and 36% of millennials want to be paid in tokens, and 50% of gig workers are open to be paid partially in cryptocurrencies. To understand the demographics and psychographics of this market, we thought about descriptors like global digital nomads, freelancers, Web3, blockchain, remote first crypto enthusiasts. These are workers that are aged 18 to 45 who tend to live outside cities. They care about global issues and love to travel. More than 40% of the jobs available to them are remote, and this will only increase with time. The issue at hand is that there are modern compensation structures that must comply with regulations that are not changing fast enough. Tokens are in demand for several reasons: as a store of value, as an opportunity to participate in projects, as an easy way to move from one place to another, as an alternative for places with unstable banking systems or high inflation. The Web3 job market is expanding at a rate of 76%, and to bridge the skill gap between supply and demand, many blockchain courses are being offered worldwide. In our experience with payroll for a distributed workforce, we found that running a multi-cryptocurrency compensation structure is a complex, costly, and time-intensive operation rife with challenges. A typical crypto workflow requires coordination with many parties involved. An HR person requests for payroll, while a technical person has to process it by using different platforms and authorization mechanisms. The recipient has no control over the type and amount of cryptocurrency they receive. The user interface is often difficult to understand and prone to errors, making the process complex and inefficient. Srini and I are experienced at getting paid and running payroll in cryptocurrencies in our previous jobs. We have experience working at both large corporations and startups, and we're really passionate about cryptocurrency and blockchain and frustrated with the poor user experience, making us the perfect team to build this product. Our solution will simplify crypto payroll with a user-friendly interface. Employees can choose their token type and percentage of net pay while employers will manage hassle-free operations and access reports on the dashboard to help them stay compliant. Blockchain is a rapidly expanding market. By 2030, the global blockchain market is expected to grow at a CAGR of 87.7% to reach 1.4 trillion. The Web3 blockchain market is growing at a CAGR of 44.8% and will reach 53 billion, while the freelance economy will reach 9.7 billion by 2028. Applying these trends, we calculated that by 2030, the total available market will be 3.4 trillion, a serviceable available market of 6.4 billion, and a serviceable obtainable market of 1.4 billion. In order to gauge our hypothesis, we tested by talking with people who are wanting to get paid partially in cryptocurrencies. We tested what drives this preference and how easy it is to set up through different interviews that we've had with over 70 Web3 employees and employers. Most of them recognize the desire and the challenges of implementation. Srini, over to you.
So our business model is $30 per user per month, which is a payroll as a service. And for settlement, we have discovered that we can charge anywhere between 3 to 6% per transaction. And in future, we want to offer premium package as part of our customized services, which will involve token cash flow management, etc. Our unique positioning, there are solutions like MetaMask, Gnosis, Safe, etc., which are very highly technical. And there are companies like Toku, etc., which are offering to unique markets like DAOs, etc. So we want to be the UX-led solution which is ready for enterprise HR payroll. That is our positioning. The go-to-market strategy, we are planning to come up with the MVP by July 2023 and refine platform up till early 2024 and focus on user growth subsequently. And we have divided our rollout into 5 phases, which starts with crypto-first organizations, and ultimately phase 5 ends up with enterprise HR payroll to time the market evolution. And the accomplishments so far, so we have signed 4 letters of intent with two of them core Web3 companies and 1 employer on record and another technology services company. And we are planning to raise our first fund this month and subsequently launch our MVP by July and a beta launch by August. So yeah, that brings us to the end of the page. Thank you.
All right, thank you so much. Yeah, Srini and Titi, yeah, great presentation. Any questions, please?
Yeah, this is Fedor from 369 Capital. Hi, thank you very much for the pitch. I think what you're building will rely heavily on the UX that you later on will deliver. Can you maybe draw a picture or tell us what's your vision in terms of that?
Yeah, so the first part is really the onboarding part. As much as the people in the crypto space find wallet use maybe easy, but we believe that it can be easier. So it starts with that. For both employees and employers, there are 2 steps. One is a one-time setup that we're going to help them really come on board with, right? And there's this wallet setup, and there's like connecting to bank accounts, KYC, and all of that. By taking that load off the clients, that would make them easier to use it. The second one is really a recurring process. And employers and employees, they're very used to looking at dashboard in their HR system and going through the motions. So we're just going to mimic that, the process that they already know, and our background would be completely in blockchain, which they don't need to interact on. So these are the 2 components that we've been thinking about of where the majority of friction really lies. And that's how we simplify.
Yeah, and also, the user experience is also about understanding the process and the mindset of the payroll person behind the scenes. And Titi and I have the experience of running these payroll. And the focus is not just about a UI, with jazzy colors and all, which the Web3 world is ripe with. The focus is about simplifying and aligning with the process, just to reword some of the parts which TT has mentioned.
Thank you very much.
Thank you. Any other questions?
Maybe a regulatory question, because you're planning to tackle, I guess, of course, your first users will be like Web3 companies, but then you also said, digital nomads, freelancers, and so on, traveling around the world, living and working in different jurisdictions, not only on the regulatory side, but also maybe on tax side.
Yes.
How do you planning to tackle this problem?
Beautiful question. That's exactly what we're building. So the companies that we've signed up so far are employers that are based out of North America, but they have employees all around the world. So when it comes to staying compliant, the jurisdiction of where the person is a domicile is really the definition, right? And we do not have to recreate all of these, because every jurisdiction have these defined according to their Department of Labor. So we just have to map to that. And that's exactly what I've been working on the last 5 years, where I worked with companies that hire people globally, and then we comply with each of those standards.
So there are two parts to it: the regulation of the employer, wherein we capture the fiat and the jurisdiction of the employer initially during onboarding. And the second part is the regulation and compliance for the employee. We capture the same at the other end, and we do all the conversions of transactions in terms of fiats of the employer fiat as well as the employee fiat, and we provide the reporting. This is one product side of the way we are handling the compliance at the product feature level.
Perfect. Thank you. Understood.
Thank you very much. Any other questions?
Just to confirm, so do you guys support like part of fiat and part of crypto kind of payroll as well?
We are building complete crypto rails, but we are in conversations with quite a few partners to actually use their fiat rails. We are also having conversations with global HR payroll providers that to use us as their infrastructure. We are exploring path maybe as a white label solution, or maybe as a hands-off infrastructure where they get to use our crypto pay rails and we use their fiat pay rails.
Okay, gotcha. Thanks.
Thank you. Any other questions or comments? I think not for now. So yeah, TD, Srini, appreciate the pitch. Thank you so much. Great solution indeed. Thank you.
Thanks a lot. Thank you.
Thank you for the time.
Thank you. Amazing. So moving on, we have 3 more amazing startups to go. So wanted to pass the mic to Julius Serenas, representing Neurochain, coming from UK.
Hello, everyone. Pleasure to be here. I'm going to share my screen. I have a few of those, but rest assured. Right. Let me know when you can see the screen, and we'll be ready to kick off.
Yes, it's good to go. We see it.
Okay, wonderful. All right, so my name is Julius. I'm a Web3 enthusiast. I have been working with Web3, with blockchain for quite a while now. Previously to that, I have been working with large infrastructures within the banking sector. So working with AI and working with this particular project and creating this particular project is a dream come true, right? Where I can put all my knowledge into it. So Neurochain, in a nutshell, is an infrastructure. It's an AI infrastructure project built by community, for businesses, and for developers. Currently, what we have in the AI market is a lot of drawbacks that we see. Just to name a few, is a cost of implementation, a cost of getting and maintaining the data, working with the data, validating the data. There's a complex deployment process, and even though some of the integrations seem easy enough, but rest assured they're not, right? They require a lot of coding skill, and there's no ease of use for businesses and for enthusiasts or AI enthusiasts to try and build upon it, right? Everything is, in most cases, are closed source. With Neurochain, we would offer high quality data. We would offer a ready-to-use infrastructure models. We would offer a fine-tuning abilities, infrastructure, scalable infrastructure for hosting, for training, for data gathering, for data validation. And of course, when it is community-driven, most of the things would also be open source, which means that the growth and expansion of the project as well as of the tools would be immense. So Neurochain offers and works on 3 pillars, right? So it's community and community resources that are used in the decentralized AI infrastructure. We use blockchain to incentivize and to execute transactions between multiple parties, so between user to user, business to user, and distribute the rewards for participating in the decentralized AI. And of course, scalable system, right? The more the community is ready to provide, the more scalable and the more adapt and flexible the whole infrastructure becomes. So just a few things that can be built on Neurochain and that can run on Neurochain once the project is fully live is something as simple as chatbots, speech recognition systems, to very complex AI models for cybersecurity, for marketing, for automation in social engineering and social marketing. Like there's a huge scope, right? If and I bet you all heard like ChatGPT. It's only a simple and one tool to use, whereas the whole scope of the AI tools that are available, of the AI models that are available, is immense. And every day it is growing, and it is being done by people, by the community members who have the skill, who have the knowledge, and they want to share their findings. They want to share the research with the public. But unfortunately, it has a high cost of running, it has a high cost of maintaining, and there's no proper solutions to deploy and to scale their tools. So some of the things that we have already done and what is currently live, we have already launched our layer 1 testnet and mainnet. We're undergoing production tests. We have a layer 2 ops stack implemented as well to improve the throughput and test some of our POC tools that we need to build on top of our blockchain. We already have an MVP alpha consumer version for GPT, for large language models, for trading hub and trading aggregator. Avatar, it's a generative tool that gives the opportunity for the users of Neurochain to create and build their own PFPs, deploy it directly and mint them directly on the blockchain and use them for multiple purposes. And it comes one of the target audiences is basically that your NFT gives added value for the consumer and for the user, which allows them to collect additional points when participating for task validations, data provisioning, etc., etc. Right? So our competition is something to be reckoned with, such as OpenAI or Singularity.net. But I think, and I do truly believe that the product that we're interested in is something groundbreaking, like Ethereum was once it started, or decentralization and the community growth can help expand the tool and grow the tool on its own by powering the different adoption options, the different dApps that can build on top of it. And with our approach that we can provide the native blockchain, which allows us to scale the product, integrate with our Oracle network for distributed technologies, and allow the community to participate in it freely, is basically a main advantage against OpenAI or Singularity.net, because then it's running by community, right? It's completely focused on the community itself. So our model and our revenue stream. I explained a few things what is Neurochain, but of course it is a business to its core. And the revenue stream for our business comes from two main sources, which is the blockchain, since we're operating the gas fees, which are later on used to be redistributed for the community, for the participants of the decentralized AI. Token sale is one of which, and for business to business, our focus as an AI project, as mainly AI project, is of course small to medium businesses, which generates revenues, and those revenues can then be distributed as incentive for the community who provides running services for the businesses. So infrastructure services, costs, data services, private public clouds, all this combined gives us a firm background and a firm understanding that we can be the go-to partner for anyone who's looking for an AI solution or who's looking for an easy, adaptable, one-click approach to get AI from data training, from training the model to running the model and applying it for a specific business need. Right?
Just sorry to interrupt. We're already a bit over time, so if you want to run through the last slides, please go ahead.
Yep, just the last slides is we are very strong on marketing. We have a team of professionals from different exchanges, from different universities. So we have a very strong background. We have a very good understanding of where we are, what we're doing, and what we want to achieve. So thank you very much, and apologize for running a little bit over time. Thank you.
Thank you so much, Julius. Yeah, I hate doing this, but I have to be.
No, it's fine. It's fine. I lost track of time. It's my fault. Sorry about that.
No worries. Thank you for the pitch. That was great. Any questions, please, or comments, feedback? All right.
I got one. It's like I think you're using the same LLM model, right? As I suppose.
When you say the same, could you please clarify what do you mean by that?
I mean, it's like compared to the OpenAI.
Well, what we have running right now is our own model. It's running on our own infrastructure. Quality-wise, it's very similar to ChatGPT-4. Hardware-wise, well, we're still lacking, right? We're quite new and we're quite fresh. But yeah, everything that is done by our professionals, by our engineers. It's running on our infra, and we're building these tools as an MVP, as a POC of what can be done. We then retrain them, upgrade them, and we adapt them to some of our business partners, whom we're going to onboard as the first customers in the near future. But if the question, if this is a hidden question, if we're running OpenAI in the background and just integrated, no, that's completely out of the question. Yeah.
Cool. So, like, to introduce more about like your team's background.
Well, our team's background, I can quickly probably jump to the slide. As I said, we have business advisors, a team which is, in my opinion, one of the best that can be presented. So we have people who previously were working with OKX, with BitGet, Binance exchanges, Huobi. I myself come from Barclays and HCL, went through different engineering management roles, and I fully understand and how the large corporations, large infrastructures run, how they scale. We have researchers. Our CTO is one of the best guys I know, and one of the smartest ones. His PhD work and his research was done on manipulating visual generative approach to determine if the pedestrian is standing next to the sidewalk or not, and it's like automotive area. But yeah, so we have everyone available, and we have people whom we cooperate with from universities, our local universities from Lithuania and Poland, and so the team itself, like the marketing advisors, we have been building large projects, have been successfully running different projects from different areas, from the standard Web2 infrastructures to Web3 and beyond, right? So we have I have the utmost respect and trust in my team.
Gotcha. Thanks.
Thank you, Joe. Any other questions?
Maybe a quick question from my end. So quite impressive what you're building at the moment, but also like you have like you presented very various and different use cases. Maybe regarding your go-to-market strategy, what will be kind of like the 1, 2, 3 focus areas to focus on at the start, or will it be like that you just get what you get?
It's a complex question to answer, right? It's definitely not what we get is what we get. Our marketing strategy is, in my opinion, is effective. So we start off small with brand building and awareness. We spread the word, we build the communities in social networks. We try to attract more people who are early adopters of the technology, which then converts into the blockchain users by participating in different areas, from the grant system, which enables developers to start building dApps, to expanding their tools and attracting more community, to attract more usage, and to present more use cases of the blockchain as well as the decentralized AI infrastructure. Because while being an infrastructure, and correct me if I'm wrong, right? I sometimes tend to talk too much, so interrupt me at any stage of a time, right? But the infrastructure project in itself, the scope of which is very big, right? Because the infrastructure provides the backbone to operate the tools which are being built not only by the service provider, by the company, but also by the community itself, right? So those users, the community that we have early adopters on, would of course increase and multiply in due time when the services and the efficiency of the tool itself presents itself, right? And for early engagement, of course, we target like at least 200K active users on the blockchain. That goes through airdrop campaigns, free NFT mints, referral programs, gamified NFT minting abilities, point collection, all the best practices put in one place. But of course, our main focus is to build a community that is going to be active users of the service itself, right? So the more blockchain users, the bigger the adoption, the more tools, the early tools that can be easily adapted and that can easily be presented as a utility for businesses and for consumers. That's our main focus. And this is where our marketing team is going right now and what they're doing. Yep. I hope that answers the question. Everything else, take me to a direct message and we can go through the pitch deck and provide you a bit more detailed information if you're interested.
Definitely. Thank you.
Thank you, Marcus. Thank you, Julius. Any other questions? All right. I believe not for now, so the rest should come privately. Julius, thank you so much for the pitch and for sharing the project with us. This is impressive. Thank you.
Thank you.
Amazing. So moving on, I wanted to pass the mic to the Toronet team. I think Bolaji, you're pitching today, right?
Yes, I am.
Okay, perfect. Then the floor is yours.
Thank you very much for the opportunity to speak to your investor class. And I'll run through the decks rather quickly. The main idea I want you to get about Toronet is that we've built a layer 1 infrastructure for communities in the global south, starting out of Africa. And when I talk about the project, you'll understand why. Why is a layer 1 infrastructure so important for the global south, Africa, this part of the world? It's simply because people have got real problems that traditional financial institutions have not been able to solve. And Web 3.0 can solve them. And those problems range from something as simple as being able to find food that is affordable, to being able to own your own home, to being able to access financial services that are cheap and affordable for you, and even to a clean environment. So Web 3.0 can solve those problems. And because we believe that the current infrastructure that exists was not designed with Africa in mind and many other parts of the global south, South America, and even inner cities, even in the US, we build this infrastructure that allow communities to run embedded finance services. And we did this because we believe that embedded finance services inside communities is the next evolution of fintech, so that communities can take charge of their future and really help their members to really improve their lives. And that's my third point. Web 3.0 can change lives. I will lead the scene by talking about real projects that are on our infrastructure today. If you take a typical farmer in many parts of the world, Africa inclusive, access to finance, it's a problem because traditional financial institutions cannot serve these farmers. But Web 3.0, because of its decentralized nature, can in a very clever and interesting way. And if you take a look at the environmental problem, plastics, in the location where I am now, one of the fast-moving consumer goods company puts into the environment every year 5 billion bottles of plastics. Think about the amount of wealth that represents if it can be collected and recycled. So we've got such a project that sits on the infrastructure. So on our infrastructure today, before I go into the product very quickly, we've got 3 communities that have gone live on the infrastructure. We've got a community that is using crypto for pure play payments for their members. They are across the whole world, and all they want is for their members to pay in one currency. So they created their own global digital currency on our infrastructure. And then we've got the plastics community, which are small women and men in various parts of the community that want to convert plastics to wealth so that they can build capital for their businesses. And then we've got my favorite, which is agriculture. Millions of farmers that want to access financing through DeFi at cheaper rates. And in terms of our attraction, we're growing very fast since we took the infrastructure live November last year. We've been adding new users into Web 3.0 at a rate of 2,000 a day. And that's why the community strategy for us, we think it's the way to use Web3 infrastructure to scale Web3 adoption across the world. So what's the product that we've built? We built a modular product that has got 4 layers. One is the settlement layer, that's the blockchain, that's the Toronet blockchain. One is the digital asset layer that allow you to create native tokens of the network and various stable coins. So if you're in Kenya, you could create Kenya Toro. If you're in Nigeria, you will create Nigeria Toro. If you're in South Africa, you will create Rand Toro. And we've created the smart contract layer where you load smart contracts on the network. And then we have the application layer, which is where the project sits and the dApps. And why is this important? It's important because, and let me talk about, it's important because what it does is that it makes it easy for people to enter the infrastructure. The gateway into our infrastructure is the wallet. So developers build on the wallet and they have access to the full bouquet of services that are available on the wallet. And we've done something beautiful on the infrastructure too, which is to make tokens on the infrastructure convertible. That's the interoperability question. What's our revenue model? Our revenue model has got 3 bits. There's the transaction fee model. There's the revenue share model with the projects or communities that build on it. And then there's the stablecoin model. When you mint the stablecoin of the network to do various things, we make money from all those bits and pieces. We're at the point whereas we are now turning on revenues on the network. So what makes us different? And I'll wrap up my presentation in the next 1 or 2 minutes, are really 5 things. Number 1, we created our own standard. We call it the TORC 2022 standard, which allows people in this part of the world, the global south, to run buy now, pay later contracts, to run all kind of clever decentralized financing programs. We've made our APIs of the blockchain open APIs. We feel this is not the time to be billing for that so that people can develop quickly. We created a customs tariff model in which projects create tariffs and they share with the protocol. So we inverted the standard Web3 model. And then we've made available to communities smart contract templates so that they can launch projects really fast. And then we have something that doesn't exist in Web 3.0 today, a roles API. So you can assign roles to addresses and give rights to those roles. So those are the things that makes us different. In terms of our tokenomics, I only speak about one point. We built our tokenomics around 3 ideas, which is balance of power. The community will hold 33% of governance tokens, investors will own 33%, and the team will own 33%. Our native token utility is just really 5 things. It allows access to distributions. It allows developers to access the developer APIs. It helps everyone participate in the network governance, for new projects. And then it's got the natural utility of any native token, which is you can use it for peer-to-peer payments and things like that. Our maximum token issuance is just 35 million tokens, no more than that. And we call our governance tokens storages. So we've got the governance token and we've got the stablecoin token.
Balaji, I'm really sorry to interrupt, but we're already a bit over time. So if you want to finish with the last slides, please go ahead.
That's the last slide. So we're just here to ask your investors for 3 things. If you've got projects that are looking for this kind of infrastructure, we want you to send them our way to build. We want you to invest in our projects so that we put gas into these rockets. Those are the 2 things we're asking for. And thank you very much for listening.
Thank you. I think I'm getting this habit of interrupting at the last slide, but yeah, I'll work on this. Thank you. Any questions, please, to Balaji in Toronet?
Hi, this is Jack from Gatelabs, and I really appreciate your work to help people as well as to protect the environment. Yeah, and I noticed that you have listed your plans. You want to build your DEX and issue your stakecoin and to issue the L1 chain. Yeah. So I would like to know the timeline of your steps this year. And this is the first question. And the second one is that you have designed your tokenomics. So I'd like to know that what's your listing plan this year?
Can you ask the second question again? I missed it.
Yeah, the second question is that you have designed your tokenomics, right? So do you have the listing plan this year?
Oh, yes. So let me talk about the steps. So what we did in the earlier part of the year, and permit me to mention some of my co-founders are here. Dr. Gatelabs, who is in New York, Dr. Wayne Lee, who is also in New York, and we've got some other people in the room. So the steps for this year, what we needed to accomplish between November and now is to onboard communities that are the foundation of Genesis communities. Because when you bring people on chain, you bring their transactions and their needs with them. So we've accomplished that. We've also accomplished getting the product ready. We've got a minimum viable product. And now the product has been tested. We have more than 60,000 transactions now, and we have more than $7 million value moved on chain right now. So what we need to do for the rest of the year now are really a number of things. One is legal and compliance, to really make sure that the legal stack is done in a way that protects investors and everyone. The second thing we need to do is now to support projects to scale their products. The third thing we need to do this year now is what you already mentioned, or late this year, early next year, is the listing plan. We didn't just want to list a token for token's sake. We wanted to list a token whose fundamentals are known and they're understood, so that those who invest in the token, they understand what they're investing in and they can get value out of it. I hope I responded properly, and I can ask Dr. Kenny Gatelabs, my co-founder, Dr. Wayne Lee, to contribute if they want to add to it. Thank you.
Thank you.
Let me add just one additional thought to that. I do appreciate, many investment portfolio has, different bevy of tokens, and there are tokens that are designed by the tokenomics so that, they get listed, they grow. But many of the projects aren't really solving a real world problem. What we've looked at is we focused on solving a real world problem rather than fast tracking, getting on an exchange, emissions that's designed to boost its value so that it gets dumped eventually. I believe that the Toronet token is one that if an investor is interested and they get involved, it's a token that they want to kind of really consider as something that's going to be growing and there for the long term. I believe that a lot of tokens right now and a lot of projects, some people cite numbers like 90-95% are not really, built for the long run. But this is a token that's supposed to solve real problems. And that's what we're trying to focus on rather than on the listening strategy. And the projects that Bolaji mentioned, they are actually people in the communities that do not even know they're using crypto, like the SP's project. They're using it to make donations within their communities, within their churches and institutions, and they don't know that it's crypto. And that's what we believe in, real world use that's adding real value to people's lives. And that's what we believe will drive value in the long term.
Got it, thanks.
Thank you, Jack. Thank you, Ken, Balaji, for answering. Any other questions? All right. I believe not for now, so the rest should come in private talks. Thank you so much, Balaji, Ken. Yeah, great presentation. Thank you, appreciate it. Amazing. So moving on, the last but not least, I wanted to pass the mic to One Click Crypto, represented by Max Jampolsky, coming from Netherlands.
Hi, everyone. And let me just share my screen real quick.
Sure.
All right, you should be able to see it now.
Yes, all good to go.
All right, seems like a DeFi is the talk of today. So I'm happy to share what we are building here with One Click and how we are aiming to solve some of the DeFi challenges by our solution. So our product is a yield optimizer and a portfolio manager. And I'm not gonna go too deep into details about DeFi and what problems are you facing. Those who are familiar with DeFi and spent quite some time there understand that the space is challenging and full of risks and inefficiencies. From like the most critical ones is currently the high gas fees and especially on the mainnet on Ethereum with the recent hype around meme coins. The network got really congested and the gas fees went through the roof. So if you were yield farming on ETH on Ethereum with like a low position size, the yield that you would be getting could be much lower because of costs related to transactions. Also, the yield discovery is quite challenging because simply there is just too many options across too many chains, and this can cause a certain decision paralysis, and often it's really hard to find the good yield farming opportunities on chain. Also, the yield market is too fragmented because of the opportunities being located on many different chains. And if you want to farm effective yield, you need to be able to move your liquidity across various networks, and it can feel like a full-time job sometimes. Also, yields, they keep changing. They are not static by nature, they are dynamic. So if you are managing like portfolio with like 10 different active positions, it's also like day and night job where you need to shift capital from one protocols to another's to keep maintaining earned yield and things like that. Also UX and a lot of hidden risks make DeFi quite a user unfriendly place right now. And that's what we are trying to solve with One Click Crypto. We want to introduce a much better way of interacting with DeFi yield protocols that will first minimize the number of clicks you have to make when you start earning in DeFi, and second will minimize also the gas fees that you have to pay. So this is like a short case study or illustration. For example, if you are on ETH right now and you try to create equally weighted yield farming portfolio on 5 different protocols like Yearn, Compound, Aave, Uni, and Lido, with 20% each. For each deposit and transactions, you have to pay fees, gas fees. You have to pay for approvals of assets. You have to pay in trading fees and slippages. So if you have, for example, $10,000 in ETH, after all this process of depositing into these protocols, you will end up paying about $165 in gas, and it will take you about 1 hour to complete this process due to network being busy. So you will end up losing almost 2% of your total portfolio value just on gas fees, which is kind of multiplied the less portfolio value you have. Similarly, you might think that Arbitrum network or like different scaling solutions for Ethereum would help to improve this. But if you are like a smaller investor, you have like about $1,000 in ETH, you want to do the same process on Arbitrum, you'll end up spending about $10 in gas fees, which is about 1% of your portfolio value, and it gets also more expensive the less money you have. And like, let's think about who are the current users of DeFi. There is not many like high net worth individuals. Of course there are, but the majority of all DeFi users came from potentially third world countries. They don't have that much assets, and they just want to get the same yield as everyone else. But currently the networks, the gas fees, they're becoming much more difficult for them to do so. Also, the number of clicks on Arbitrum is about 56 when you try to create this portfolio manually. But through the solution that we've made, through one click, it all gets simplified to basically 2 clicks, and the total gas fee is about $14 on Ethereum network and about $1 on Arbitrum network. So through our solution, you can create basically the same portfolio with just a few clicks and without spending too much in gas. And the user experience is also quite more friendly. We have already a live demo of the web and mobile version of the app, which you can use to create a DeFi portfolio of various opportunities in the space. We are targeting a global asset management market because we believe all assets eventually will go on chain. So currently it's just crypto, which is a very small market, but eventually all the $100 trillion of global economy will have to migrate on chain, just because it's a much more efficient and much better solution, technologically speaking.
Max, I'm sorry to interrupt. Yeah, a bit over time, so you can cover the last slides now. Thank you.
Okay. Yeah. So quickly about the team of the product builders from TradFi, FinTech, and DeFi native builders. We're offering a token, which gives investors the right for the future protocol TVL. Now we're asking for about 1.2 million, which already have a lead investor, and about 50% of the round pre-subscribed, and aiming about 470 million in TVL in 24 months. So yeah, if you're interested, you could get in touch on Telegram, or also feel free to ask any questions now.
Thank you so much, Max. Yeah, appreciate sharing the project. Any questions, please?
Oh, maybe a quick question from my end. So thank you for the presentation. I understand it correctly that your first focus will be kind of the retail market, so the individual private investors, right?
Yeah, exactly. Our first focus is like DeFi users, regular folks with MetaMask and some assets on it. But later we can scale this to more sophisticated institutional potential investors, or even bridge TradFi and Web2. But later in the project phase where you have proper regulations and licenses for this.
Thank you.
Thank you. Any other questions? Yeah, Joe, please go ahead.
Yeah, I would like to ask, what would be the main purpose for you guys to raise another 1.2 million if you in this round? So how do you spend those 1.2 million?
So that's a good question. So we want to spend about 20% on development of the protocol, and then the rest 80% we will deploy on the actual TVL of the protocol to farm, and we will do it cross-chain to have a little bit on every chain we deploy. We eventually want to cover any EVM compatible chains, and this will help to bootstrap the protocol TVL and attract also more users and help to bring more revenue into the protocol by farming it, farming the yield.
So that is 80% for the liquidity, right?
Yeah, more or less 80%.
Sure. Thanks.
Thank you. Any other questions? All right. I guess not for now. So Max, yeah, really appreciate the pitch. Thank you so much for sharing this with us.
Thank you for having me.
Thank you. And it seems that we are done for today. So I really appreciate everyone who came here in Zoom and also the ones who are watching us in social media. Great job, founders. Really appreciate. And yeah, all VCs, thank you so much for coming as always and for your great questions. And special thanks as always to Abdul for picking the best projects for today. Thank you so much, and we'll follow up shortly with all the details. Thank you so much, and yeah, have a great day, evening, morning, depending on where you're based. Thank you.
Thanks, everyone. See you. Have a great day.
See you.